Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we are going to talk about a brand new exposure draft that just was issued by the FASB this week, and it is on not-for-profit entities in particular. And this one's a really interesting one. There has been a lot of back and forth, somewhat of a political back and forth in this scenario that kind of led to this. So the title of the exposure draft is Presentation and Disclosures by Not-for-Profit Entities for Contributed Non-Financial Assets. Now, they're not focusing on any one type of non-financial asset in here, but a lot of this does have to do with pharma, and I'll tell you a little bit why as we dive on in here. So a little bit about our background. So when we look at this one, presentation and disclosure, really what they're focusing on are these contributed non-financial assets, and the goal is to increase transparency about these items. Now, why do we need transparency? Well, we know that when we are going to receive a contributed non-financial asset, we are going to fair value it. Now, this sometimes is pretty easy and sometimes is a little bit more interesting. So if I'm a pharmaceutical entity and I have some prescriptions that are, say, not able to be sold in the United States because they've been labeled as expired. Some would argue, and they do, that expired prescriptions are still actually pretty potent, and there's just sort of a rule in the United States about them. So if they donate them to Africa, to a nonprofit there, then that is deemed to be a donation of a non-financial asset. And when you value that, the question is, what is the fair market value? Is it the value of what you could sell them in the United States for if they were not expired? Is it for, is it expired and therefore have no financial value? And so kind of an interesting issue. So lack of transparency about the valuation of these contributed assets. Currently, the only time we have a real disclosure requirement is if it is a contributed service. But otherwise, there's not a lot of disclosure requirements regarding contributed non-financial assets. And so the response here is to address this by providing both presentation as well as disclosure response. So in the proposal, they are planning to present contributed non-financial assets separately. It's going to be a separate line item in the statement of activities from other donations in order to be able to identify these items. And then some additional disclosures. So the contributed non-financial assets received disaggregated by category that depicts the type of contributed non-financial assets. So remember, it's revenue for the entity who's receiving it. It's an expense for the person who is donating it. For each category of contributed non-financial assets, so this is going to be broken down at sort of a segment type level, qualitative information about whether the contributed non-financial assets were or are intended to be either monetized or utilized during the reporting process, during the reporting period and future periods. So again, can you use them and are you planning on monetizing them? So for example, if you have received a donated contribution for Goodwill, for example, are you planning on monetizing it? If utilized, a not-for-profit would disclose a description of the program or activities in which they were or intended to be used. So if I'm going to use it as part of my program, say that someone donates a desk and it's going to be used for an office in our building, right? We're going to be able to provide that information. A description of any donor restrictions associated with the contributed non-financial assets, and then the valuation techniques. And this is where they're just being a little bit more clear. Inputs used to arrive at fair value measurement, including the principal market or advantageous market, really diving into how did you get that number? What market are you using? What are the inputs that you're using to come up with the valuation as a revenue line item for that fair value? And then obviously that would be subject to Topic 820. So they're not changing Topic 820. They're just providing a little bit more disclosure within there, besides obviously our contributed services, about these contributed non-financial assets. So if you are a nonprofit or you're an audit firm that works with nonprofits and you are interested in this and you have some feedback for the FASB, I know they would love to hear from you. Comments are due April 10th of 2020. So hopefully you'll have an opportunity to take a look. It's not very long. It's a very direct, very focused area here, and they wanted to make sure that it got the appropriate amount of time. So you can see here, it has about a 2-month comment period to allow us the opportunity to provide them feedback. All right, well, it was a quick one on the Genuine Learning blog this week, but an important one. So super excited to be able to share that with you. So I want to wish you all a wonderful Valentine's Day and President's Day, as those are both coming up this week and next week. And I will see you next week on the Genuine Learning blog. Have a great day, guys. Bye-bye.